Good morning, everybody. Happy Friday. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com, and this is my trading game plan. As always, all charts, no BS, folks. We're going to get right into it. Markets are snapping back today after a big drop yesterday. NASDAQ fell 1.5% on the back of a meta collapse. Interestingly enough, remember the head and shoulders target that I told you where it was going to go? It hit that yesterday and bounced beautifully. Great trading opportunity there, folks, if you saw and watched and learned the head and shoulders target calculation. I'll go over it in just 1 minute. All right, so markets fell yesterday. This was again on the back of the President Xi and President Trump meeting that really didn't produce major meat and potatoes here. And so again, the market said, wait a minute, we rallied a lot early in the week on the back of hopes for this. Let's take some profits off the table. In addition, after hours yesterday, Apple came out with solid earnings and great guidance. That stock is up, and Amazon blew it out of the water, surging to the upside. But guess what? Both stocks could be nearing cycle highs based on the charts. I'm going to show you these charts. They are eye-opening chart levels. All right, let's jump right into the charts here. As always, we start with the S&P futures. Where the heck are the markets to start the day? This is, again, our sell-off yesterday. This was during market hours. You can see it's darker here. That denotes market hours. And then markets, again, closed right here, right basically at the lows. And then here's where we got the Amazon and Apple earnings. The market's surging back up. And then really over the course of the overnight into this morning, basically sideways to slightly higher. Now, this is where things get really interesting. The S&P 500 weekly chart has been what I have been focusing on. And I want to show you this because this is a big deal, folks, in terms of a potential cycle high. What we see here is multiple trend lines converging, two trend lines converging right up here around 68.85, 68.90, basically just below 6,900. Now, it's not to say we can't get through this, but this is something that I'm really intrigued by because these aren't just kind of like a 2-day trend line or a 1 week or a 1 month trend line. Both of these trend lines are well over a year going back. Remember, this is the weekly chart. So every candle is 1 week. So this right here, folks, is your COVID low from March of 2020, literally over 5 years ago. This is your bull market high of 2021, your bear market low of 2022, your pullback correction in 2023, and your liberation sell-off on tariffs in 2025. Lo and behold, what are we finding here? We are right into this level. Now, as of yesterday, that would be a weekly topping tail, but based on the gap up today, I doubt we'll get that. But more importantly, I'm watching to see what happens when we rally back up in this range. Do we kind of close on these levels? Do we close below? Do we close just fractionally above? Do we have a strong close where we close at the highs? We need to close around 69.25 to see that strong close. But essentially, as a technician, this is the number one thing that I'm focusing on this Friday's close and then going into next week. Now, again, we could have a close above and it could kind of be a fake out. We know we look for confirmation here on the weekly chart, but ultimately, I'm still watching this like a hawk more than any other thing in the market. This is what I'm focusing on. All right, let's go back to the charts and continue through. We have the NASDAQ here. This is the NASDAQ composite. I've been following this trend line, which basically, here's your Liberation Day sell-off lows. This is the daily chart. So we had the big sell-off. We came up here, and then literally right here, we go along this line. We come back. We tagged it one more time, and we pulled back. Let's see where we go today. Do we push back into that level? Do we get above that level? Or do we see, again, a fade from the gap up this morning? Now, I think the gap up today, folks, it's almost exclusively on the back of the mega cap tech. And I want to tell you a scary stat. You guys know I bring the alpha, right? I bring the crazy stats the mainstream media is never going to tell you about. So in 2000, at the dot-com bubble high, Cisco Systems was the biggest company. Cisco Systems, it was the backbone of the internet. That's what they called it back then. It was building it out. At its height, the market cap of Cisco Systems made up 3.9% of GDP of the US. The market cap was equal to 3.9% of GDP of the United States. Do you want to guess what Nvidia makes up? It makes up 16% of the GDP, or essentially the market cap is equal to 16% of the GDP today. Now, to me, I look at that and I say, should that be? Maybe. I mean, it is what it is right now. It certainly is. But we want to look at these as breadcrumbs and just saying, okay, are we in a bubble, number one? Are we in a bigger bubble, number two, than even in the dot-com era? And I think we could argue that we could be in a bigger bubble. Now, listen, just because we're in a bubble doesn't mean it can't continue to go up for months or even years. We saw that in 1997, 98, 99, until it finally topped out in March of 2000 even, right? But again, just an interesting stat there that I think we want to pay attention to. The dollar today continues to show strength. Notice again, ever since the Fed came out on Wednesday, the dollar has pushed higher as Jerome Powell was a little bit more hawkish than the markets wanted. But I will say this, folks, is that I don't think the Fed has a lot of staying power anymore. And you might say, well, what do you mean? The Fed controls interest rates. I shouldn't say the Fed. I specifically mean Jerome Powell. It's almost like a lame duck president. And because essentially he could be so hawkish that he literally doesn't, let's say, cut interest rates again until he's out of office, essentially. But then the market's starting to understand that as soon as we get a new Fed chairman, they're going to probably cut 50 basis points right off the bat. And so I think that's just something we have to take into account, that the markets will always be kind of discounting a hawkish Powell. Now, granted, the markets again did sell off briefly on the back of Jerome Powell on Monday, and we have seen the dollar move up, but it's not like the dollar's screaming up. 10-year yields have bounced too, right? If we go back to the yield and we bring up the 10-year yield, the yields have bounced, right? But again, okay, so we went from 3.976 to 4.11. I mean, that's not a big move. And I honestly think we're going back down on yields, because I do think that ultimately the markets understand what I'm saying, which is, again, Powell can be the most hawkish in the world. Come next May, you're going to have an absolute dove that's probably doing 50 basis point cuts into the new presidency. Well, not presidency, but chairmanship. All right, Meta. Here's your Meta chart, guys. This was the target of the Head and Shoulders. Again, I literally months ago isolated this down in this very trading game plan here. I said, guys, Head and Shoulders, once it breaks, we can do a measurement. The measurement is so simple to do, folks. Everyone should know this. You take the highest point of the head, which is this candle right here. That's the highest point. You drop a plumb line straight down to the neckline, right? You take that distance, and wherever you break, that's your measurement right there. And look at where Meta went yesterday, right to that level, and bounced. And today it's trading up a little bit. Now, it's not to say, I want to be clear on this. Meta could go lower, and it probably will go lower. But in the short term, once you achieve that target, the Head and Shoulders has played out. Like, it's over. All right. Now, what we look for is a bounce. And do we get a bear flag? Okay, a bear flag's forming. We start to look for further downside, or maybe we get a reversal back to the upside and it starts to look bullish. We have to wait and see. Let the charts tell us. The charts told us this Head and Shoulders broke. It told us the target. Now, once that's complete, we push it out of the way and we focus on what the next pattern forms to give us the high probabilities in trading. All right. Keep going on here. Here's Apple. Apple, again, initially surged on earnings all the way up to 285. It then has fallen back down to 277. So listen, it's still net green. It's up, I think, about 2% or so on the back of these earnings. I want to show you something big, though. This is something that's getting my attention, guys. Look at this. So you guys know I'm always looking at the macro in terms of the bigger time frames. This is the weekly chart. Look at what I've annotated here. All right, March COVID low, December bear market low, April liberation sell-off collapse, right? High of the parallel, December bull market high. Here, December 2024, pivot high before tariff collapse. Notice this, and guess what? In the after hours, we pierce this line. I'm going to be very curious if we go up. The reason I draw this attention to this chart is, number one, it's a $4 trillion company, so it's got to be talked about. But number two, this has literally marked major pullbacks. This was a 35% pullback. This was a 35% pullback. So again, who am I to say anything differently than we could be looking at a major pivot top around 283 on Apple, guys. That is something to behold and keep on our radar. We could be. And listen, I'm not short Apple, but if we get north of 283, I probably do start nibbling on a short on a swing trade basis, maybe even a multi-month hold on Apple based on that chart. And again, notice I'm not trying to reinvent the wheel. I'm using past data and the trend line parallels, noticing that major pivot highs and lows were made along it. And then I'm just extrapolating out. It's just simple, right? It's simple. All right. Amazon. Amazon, great move today, trading upwards of 250 and change, basically 253 right now. Notice these two trend lines. I'm going to show you why I think Amazon could also be near a top up here. Going to this chart, we're going to zoom out on this chart. This is the daily chart. Number one, here's a high, right? So we have the high from 2021's bull market connected to the high just before the liberation sell-off, right? Into basically it even continued, into April lows. And that, my friends, is number one. And you just saw it on the intraday chart. We just tagged, this is that same line right there on the intraday chart, right? Now let's go back here. Okay, now we have the liberation lows connecting through here, always bouncing. And then we broke down, what's this called? This would be a retrace to the scene of the crime, this orange trend line right there. You're literally at two major trend lines. I would not be surprised if we see a fade on Amazon today. Listen, I think it's still going to be up. The earnings were fantastic, but I would not be surprised if there's a trading opportunity here and maybe even a swing trade short off of this retrace. Very cool charts today, by the way. I love game plans where I have these mega trend line to show you. Now, here's a chart, WDC. Now, WDC, it's $100 and change billion company. So it's a big company, but it's not like an NVIDIA, but it is a chip stock. And this one is helping reinforce the AI narrative today. We always look at these things and say, oh, today this stock is hurting the AI narrative. Generally, it's been helping the AI narrative. This, again, WDC reported earnings. This stock, again, is pumping to the upside, up over 10%. This chart here, folks, it's basically at all-time highs. In fact, if we go to the monthly chart, look at this. I mean, the stock, by the way, this company's been around since 1973, so it's been around a long time. This is the concerning thing. All right, in technical analysis that I've created, some of the stuff that I've created, folks. Number one, confirmation signals, a creation of mine. Time counts is a creation of mine. This is a time count. 1, 2, 3, 4, 5, 6, 7 months in a row with a gap up here on earnings. I'm going to be eyeing this again for a topping being put in October with a pullback expected in November. I'm going to watch that. I'm going to see where it gaps up to today. But again, doesn't mean it can't go higher intraday or even at the start of November. But generally, when you have a vertical move with a time count, a 7 count here, this would be an opportunity for a pullback. Coinbase, I wish I had more for you guys on this. Coinbase just isn't doing much. All right, it's basically flat to slightly positive on earnings. Certainly, it's not one of the big movers today, even though it's a big player. Coinbase continues to be and probably will be beholden to Bitcoin's price action. By the way, MicroStrategy's reported MSTR here. That stock, again, is rallying up a little bit. But again, you know, when someone gets into MicroStrategies, they don't buy it for their core business. Their core business is basically a neutral business. It produces, I think they made like 100, I don't know, it's like 100 million in revenue, whatever it is. If you're buying MicroStrategies, you're basically buying it for the Bitcoin. Now, they did increase their Bitcoin holdings over the last quarter. But for me, my biggest issue with MicroStrategy is that this stock, number one, has broken down from a major trend line. So even this little bounce here on earnings, and we can see it's up on earnings a little bit. But look, I mean, it's still way down. And remember, there's a premium built into MicroStrategies because of Michael Saylor. Basically, if you add up all of the Bitcoin that MicroStrategies owns, and obviously taking into account the debt, because they've accumulated a ton of debt, which is a little scary if Bitcoin ever did go back to, let's say, 50, 40, 30,000. Not saying it will, but if it ever did in a cataclysmic event, would they get essentially margin called? And that's the other issue here. But the point being is if you're into Bitcoin, just buy Bitcoin. Why would you pay a premium to own MicroStrategies? I don't get that, So anyways, Some people do. They've given it a premium. Doesn't make sense to me. Just buy Bitcoin. Okay, a couple other stocks making moves, and then we'll get right into some of the other things like Bitcoin, gold, silver, etc. Net Cloudflare getting a boost up. It is coming in a little bit on the pre-market. This stock, again, if we look at this daily chart, you can see, again, it is up a little bit. It's been trading up pretty nicely, but if you zoom out on the chart, you can see that, again, it's essentially back to where it was trading in 2021. It is going to be making a new all-time high today. I don't have any great levels on this. The only thing, if you were really aggressive, you could look at this trend line right here. We can see, again, we're just connecting the high pivot, kisses here, tags here, and this would give us an upside resistance at around, let's see, 243-ish, 244-ish. But again, it's just not a big enough move in this environment for me to want to trade. Looking at this beautiful chart of Roku. Roku initially dumped. It's come back. It's down slightly on earnings. No major trading opportunities. The only thing going into earnings that made me bearish on this, and listen, it's not even that it's down that much, but you had this big drop and then this inside bar, right? What kind of pattern is that? That's a technical bear flag, so it makes sense. It was favoring an earnings pullback, and that's what it's seeing. Twilio, good move on Twilio today. So Twilio, again, surging to the upside. Yesterday closed around 112. It's trading near 128 on the day. But again, we can see right here the big level. There's a couple big levels here. You have your pivot top at 135.60, and then there's a gap fill. The gap fill I would trade. If this gets to 147, I would look to short that gap fill. This one, because Twilio's not that big of a company, I probably won't play, but the gap fill would be a big enough move to the upside to play. Now, here's the chart. We have Palantir. Palantir is trading up a little bit today, basically just off of all-time highs. The even number of 200 is approaching here. One trend line I'm watching very closely on this trend line right here. All right, so again, notice high pivot, high pivot, high pivot. It gapped above and couldn't hold it, and then it reestablished against that trend line. This trend line here around 203 today, 203 to 204, that should be a level to monitor. So again, great move on Palantir, but the trend line again around 203, 204, that's going to get my attention for a potential trading opportunity. Flipping over to gold, gold is flat on the day, basically neutral to positive. Had a good bounce yesterday with the down move in the market. Again, here are my target prices. Support number 1 we've achieved. Support number 2, support number 3, and 4 we have not. I put the probabilities of them getting tagged based on my analysis right next to it. So we still favor a tagging of this one at 75%. 60% is okay. It's not that much above 50-50, but that's where it sits. And then this one, really, it's 50-50. It's a coin toss whether we get down here. If we do, though, folks, I am a big buyer of gold. Basically, the former pivot high, that becomes support. Remember, in 1979 into 1980, we had the same move up. You can guess where we pulled back. Where did we pull back on gold in 1980? We pulled right back to that former pivot, just like the one right here. And then we had a big bounce on gold. So if that does happen, that would be a good trading opportunity, in my opinion. All right. Silver today, flat to positive. Silver's crept up. Silver remains stuck kind of right in this kind of zone here, right? So you have all this sideways. This is, again, a good resistance level here. So we'll have to see how silver behaves. Oil bouncing back up. The only thing of interest on oil, and again, I'm always hesitant to say this because it doesn't matter until it triggers. But you could also denote, are we putting in an inverse head and shoulders here, which is a bullish pattern? But remember, an inverse head and shoulders does not matter until the neckline triggers. To find the neckline, you connect essentially the armpit to the armpit, if you will, right there. This would be the trigger. If this does trigger, folks, you want to know where the target is. Remember, this would just be the opposite of what we did on Meta earlier on in this broadcast. You would go like this, and then you would take it from wherever it breaks out and do the measurement. So essentially, let's say it breaks here. This would be a $69 target on oil. But remember, this is not in play yet. It is not even fully formed. Head and shoulders and inverse head and shoulders, it only matters when you break the neckline and close above it. So we have to close above this white trend line here. Then it's game on for a bigger move to the upside. All right, I always try to give you the exact technicals on this stuff because honestly, it matters. Like people are like, oh, technical analysis doesn't work. And it's like, well, they're like, oh, the head and shoulders didn't work. Well, it's like, well, you didn't play it right. And by the way, even the best head and shoulders in the world, like the one on Meta, it still had a failure rate of like 25-30%. It just was 70 to 75% success rate that it was going to play out at that point. But I mean, any pattern can fail. Charts are not infallible. I've had, listen, there's a reason why I don't make money on every trade. There's a reason why I have, 3 losers out of every 10 of my trades. It's because it's probability based. Always remember that, folks. And then, honestly, it tempers your expectations a little bit. By the way, if I could walk into a casino and make money 7 out of 10 times or 8, I mean, I do it in a heartbeat, right? And that's the beauty of trading and technical analysis is we can become the house, essentially, the casino. But the idea again is that when you understand something is not a guarantee, we put less money at risk, which means that when we're wrong, we lose less, and that's how you actually build real wealth. Oh man, it's getting late. All right. I could go on for hours. You guys know me, right? All right, let's look at Bitcoin real quick, but I do have to get to my trading room this morning. Bitcoin, again, here's that big trend line we've been following, guys. We closed above it, never confirmed. Confirmation is signal again. So important to the price action. The drop here, we're getting a bounce. But essentially at this point, guys, as long as we don't confirm back above the white trend line, my bias remains bearish on Bitcoin for a target around 93 to 95,000, somewhere in this lower range. All right. So again, listen, the markets are going to be interesting today. Do we just rally? Do we see a fade on this? I'm curious to see expectations from institutions. Institutional money usually comes out on a Friday in the first hour. Do we see a fade in the first hour, but then we go into float the rest of the day? I will be back today for the weekly wrap up at 3:55. I do a weekly wrap up here live at Verified Investing on our YouTube, on our homepage here, verifiedinvesting.com. So come back later and I'll give you the latest updates. As always, folks, I thank you guys from the bottom of my heart for spending time, your valuable time with me here. And that's why I always try to bring my greatest analysis, is because your time is valuable and I do appreciate it. Remember, if you wouldn't mind sharing this with friends and family that you think would find it interesting, that would mean the world to me. You guys have a great rest of the day. Thanks again. I'll talk to you soon. Take care.